Good day, guys. My name is Nick, technical analyst for SuperForex. Today we are looking at the analysis on the currency pair USD JPY. And first, we are talking of the fundamental analysis, and then we move right now to technicals. Right, we can see that Japanese yen ticks higher after some jawboning by the Japanese authorities, and the Bank of Japan Governor Kazuo Ueda sounded a bit hawkish and further boosted the JPY currency. While Fed outlook on rates underpins the USD and lends support to USD JPY, the Japanese yen recovers a bit after hitting a fresh weekly low against its American counterpart earlier today, and remains on the front foot heading into the European session with some verbal intervention by the Japanese authorities, along with comments by the Bank of Japan Governor Kazuo Ueda, which had turned out to be the key factor lending support to the JPY. Now, a recession in Japan might have already dashed hopes for an imminent shift in the BOJ's policy stance in the coming months, and this, along with a generally positive tone around the equity markets, should keep a lead on any meaningful appreciating move to the safe haven JPY. Now, the US dollar, on the other hand, continues with its struggle to attract any meaningful buying and further contributes to the USD JPY pair intraday pullback of around 25 pips from the vicinity of mid-150s. Meanwhile, firming expectations that the Federal Reserve will keep interest rates higher for a longer time, which has been bolstered by the hawkish FOMC minutes meeting, which was released yesterday, Wednesday. And of course, it remains supportive of elevated US Treasury bond yields. And this favored the USD boost and suggests that a part of the least resistance for the currency pair is to the upside. Now, with Japan's Finance Minister Shunzi Suzuki reiterated on Thursday today that the government is closely watching FX moves with a high sense of urgency and lend some support to the Japanese yen. Bank of Japan Governor Kazuo Ueda said that service prices will continue to rise moderately. Expect a positive cycle to strengthen, in which a tight labor market leads to higher wages and household income. With all this said and done, we are expecting to see some decline to the 149.83 axis. So we put our stop loss somewhere at 150.66, and take profit will be on the most recent support zone, which is 50 pips away at 149.686. Of course, that's good money. And that's our technical analysis on today's currency pair USD JPY. Now let's move over to the stock markets.
Hello, welcome back, guys. And on today's stock market, we're having a look at technology giants, Intertek. Now, we're thinking a combination of credible medium-term revenue growth and margin expansion targets, relatively conservative FY24 consensus assumptions, plus the potential for Intertek to deploy surplus capital in a disciplined manner, sets up Intertek for outperformance versus the wider sector this year. Now, RBC is said to have, over the medium term, Intertek has targeted a return to 17.5% peak margin, and beyond which consensus assumes does not happen before FY28, which has been raising the possibility of upside surprise sooner. Now, our management team is focused on best-in-class benchmarking, pricing initiatives, and M&A is likely to focus on higher growth, while high-margin sectors, in our view, it said so. Although the margin ambition is not strictly organic, it highlights Intertek's desire to keep driving EBT growth ahead of revenue growth. So we might be expecting push up to the upside for the Intertek technology giants, and it's currently balancing on a very important resistance zone at 4460.66, and we're expecting an inflation to at least to touch the last previous resistance at 4525.34, which is about 447 pips thereabout. And if the breakthrough happens, it might break off that resistance and head up to a new high, which should be over 671 pips thereabout, of course, which is good money. And that's our technical analysis on today's stock market Intertek. I remain your host, Nick. Bye for now.